Well, good morning, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach and senior manager with Charles Schwab. And today we are going to talk about lots of different things, but our theme for this year is earning an income on a weekly basis through trading a smaller account. Now, you may say, hey, I don't actually need to withdraw any money from this trading that I'm doing. I just want to grow the account. But either way, we are looking to earn, a return on a regular basis in this account. So as I like to say, and I'm stealing this line from Kevin Hinks, we're in the moving business this year as opposed to the storage business. So we're doing shorter term trades as opposed to longer term buy and hold trades. And so, that's what we're going to discuss today. So if you are not following me on X, my handle at Barb Armstrong CS, consider this your formal invitation. Also, we have Kevin Hinks with us in the chat. He's a friend and fellow coach. He's a really great guy and posts a lot of charts and great stuff on X. You'll want to follow Kevin as well. At Kevin Horner CS. So just before we get in the thick of things, because today is brought to you by the numbers 6, 3, and 5, in that we have 6 trades that have hit targets. We have 3 trades that are currently still percolating, and then we want to place 5 new trades today. So buckle up. We're going to cover a lot, but know that part of what we're covering are option trades, and know that options carry a high level of risk and aren't suitable for all investors. If you are new to all of this, you have to apply for option trading privileges with Schwab, and not all will qualify. We are using the paperMoney software application on the thinkorswim desktop platform. It is a brilliant place to learn and hone your skills and make sure you have a trading plan and you understand your strategy before you consider trading something in a live account. But know that there are some nuances and differences. The most significant one for our class is that short positions will never be assigned early. And if you don't know what that means, no worries. Okay, no worries. We'll discuss that as we go. Okay, so we're going to do a super quick market overview. And why do we make it so quick? Well, because Kevin Horner at the market open at 9:30 Eastern does a fantastic class called Trader Talks 4 mornings a week and does a significant market overview. So if you missed it, you'll want to go back and catch that one in the archives. We're going to place a bunch of new example trades. I have at least 5 on the menu for today. And then we're going to manage some existing trades and review some of the trades we've previously placed. If you are new here, please feel free to type a greeting into the chat so that we can welcome you. We have a community of people that tend to come every Monday at high noon Eastern and every Friday for trading a smaller account. I love to call them the usual suspects. And, a lot of them are here today. We've got Will and Josh and Ray and Good Energy and John the Noble Savage and Jay, and there's hundreds of us in here this morning. So I appreciate all of you being so participatory in the chat. And for those that are new, like Ross and Mr. Dagust and there's tons of new people. Just know, if you find this pace kind of quick, know it's in the archives. So if you're watching me place a trade and you're saying hey, that was a little fast, I'd like to rewind that, just make a note that we were at about the 17-minute mark or whatever it was, and you can go back and catch it in the archives and back up and repeat. And when I was a client, because I started in this business as a client back in 2011, I did that all the time. I'd rewind, play. And so just know, if it feels a bit like you're drinking out of a fire hose, keep coming back. And, you'll get to the point where it's like, wow, I totally kept up with everything today. And that may be a tiny miracle, and that's okay. If you've never been to a live event, the last 2 weeks we were in Sacramento and Seattle doing an intro to technical analysis on the Friday, and then an intro to options on the Saturday. We're going to do our first market drive of the year in a couple of weeks in San Diego. I will be there along with Ben Watson and a host of people from all over the country. I think Kevin's going to be at that one as well, Kevin Horner. So come, and if you come, please come up and introduce yourself. Would love to take a picture together. Would love to get to chat with you about, your goals with respect to your trading and all of that kind of great stuff. These are all free to attend, by the way. We'll even, we'll have the coffee on, we'll have breakfast in the morning, we'll have a lunch, we'll have a really nice reception at the market drives. We'll even pay for your parking if there's a parking charge, but these do fill up. There will be, I don't know if we're doing a market drive this year, but the whole schedule is up. So if you go to schwab.com/events, you can see the schedule for the entire year. And you can register and, schwab.coaching. And actually, I can bring it up right here. And you want to come to in-person events. And I think actually we did 3 events in Anaheim this year. We're going to just do the one, and I believe it's in November, and it's a 2-day. It's a 2-day event in December. Technical analysis and options in Anaheim. But we do have an event in Anaheim. We're all over the country. Okay, so feel free to have a look at those. And you can still register for the San Diego event, but we do have limited capacity. So if you want to go, throw your hat in the ring. Okay, no charge to sign up. All right, and we have lots of new people today, so I don't usually go over this. And actually, I should have corrected this. We started at the beginning of January with $25,000. Our max position size is 5,000 if we're buying stock, and we're going to do a couple of stock trades today. And so you may say 25,000, you're doing a $5,000 position, holy smokes, Batman, that's a lot. Don't you think that's too high? Well, it's high in the sense that this represents, sorry, let me just come in here. This is actually 25K. And so this represents a 20% position. Now, there were some people that I talked to in Sacramento this weekend who'd say worked for Google or worked for another company, and they had a tremendous amount of stock in eggs in one basket, 40% of their portfolio or something like that. Some people might say if you had $1 million account or a $500,000 account, you may not want more than 5% in any one position. But pick a number. And then, make sure that you follow it. Okay. And then our max trade per risk is 500. And we might go 520 or 525, but we're not doing 600 or 650. Okay. So we have a max trade and a max position size. Our focus is on the short to the intermediate time frame. And we do both bullish and bearish trades, depending on what's going on in the market. So there was one year, a few years ago, where almost all of our trades were bearish. And most of our accounts sat in cash most of the year, yet we still had, a successful year. Right now, we're not doing so many bearish trades because the market has been skewed more towards the bullish end of the spectrum. Okay, so that's kind of our goal in this class. So if we bring up the S&P 500, we're not at an all-time high, but if you had a good arm, we're within, a stone's throw of it. When we look at the NASDAQ, now this is our NASDAQ, has no financials, tech heavy. It had a couple of bad days, 3 in a row specifically. And, I had drawn a kind of a pennant pattern, which it broke down below, which was worrisome. So some people thought Chicken Little was in the barn kind of warming up and getting ready to come out and do some laps. But the last 2 days have been very bullish. We're up almost 1% today still. The day's not over yet. But overall, it's been, when we look at a longer term trend, been pretty bullish. And even with a little bit of consolidation, if we look at the last year and I come down and say, show price as a percentage, we're still up, 16% in the last 12 months. And when we look at the SPX, we're up 15% in the last 12 months. When we look at the Dow, which is just FYI, hitting a new all-time high today, 12% in the last 12 months. And how about our small caps? So that's the Russell. I mean, that's within a stone's throw, up 17%. You know, so lots of bullishness happening in the market. And then when we look at sectors, and for this, I just came down to public. So this is a watch list, sector indices. And then these are custom. And if you go to my X feed, there is a post pinned to the very top. I will also put the scripts for these. There's a 4-week and a 3-month. We can see that energy has been leading the pack over the last 3 months, followed by materials, and then consumer staples. Just kind of an interesting combination. And technology and consumer discretionary have kind of been, you know, they have been lagging, you know, and they're a pretty big part of the S&P, and, you know, almost half the NASDAQ is tech. So, you know, that has, you know, caused what we have seen with this consolidation here with technology acting the way it has. But again, go check out Kevin's webcast for that. Now, I want to knock off the 3 trades that we currently have on. Now, you may say, well, I see 4, but we hit our target on this long call vertical today. So last Monday, we did 5 trades. We did 3 trades on Boeing. One was a stock trade with a target. One was a long call vertical. And then one was just a plain old long call. So you can see we're up 84% on this. And I'm just so tempted to just take the money and run. But let's come and look at Boeing. So when we did the long call in the stock position, our goal is to get to here. Okay. Our goal is to get to here. And it's just trucking along nicely. And we've got time. And we've got time. And so what we could do, though, is say, you know what? I certainly don't want to give all that profit back. So I could say it's gone from 4 to 7. I could change my exit and say, hey, if this goes below $6, I want to take the money. And so, and we could leave our target the same. So if we look at this order, so here's our call. And our order says, hey, if it goes below 223, get us out. Or if it goes up to 253, get us out. So what we're going to do is we're going to leave the target the same. And we're going to change the exit. And the way we're going to do that is by canceling this order. Okay, we're just going to cancel that order altogether. And then we're going to come back to Boeing, our long call, and we're going to create a closing order, and we're going to make it an OCO order. Okay, so we're going to make this an OCO order. So now I'm just going to create a duplicate. And on the first one, we're going to make it a market order that's good till canceled. And we're going to bring up our disappearing, reappearing sprocket and say, hey, if and or when Boeing gets to, it was 253, we want to exit. And then on this side, we're going to say, okay, the current value of this option was, just a minute. Oh, I've got to come back and look. It's at 7. So we could say, hey, if it goes below 6, we want to exit. So we're going to say, hey, we're going to make this a stop. this good till canceled. Want to make this a stop. This has to be a stop. It's not letting me put this in the way I want. So I will do this after the class, but we're going to make this a stop order, not a limit order, because it's saying get us at least $6. We want this to be a stop order. And for some reason, it's not letting me put it in that way. But that's how we'll structure that. Okay. Okay. So I will set that up afterwards, and then we can look at that again on Friday. So that's the first three. Let's go in and look at a new opportunity. And so let's look at FCX. So if you're not familiar with Freeport McMoran, I mean, it's, it was kind of going a whole lot of nowhere, and then it really took off. And if you come to the Analyze tab under Fundamentals, we can see that this is in the mining business, North America, South America, Indonesia, copper, gold, silver, and copper and gold. And, a lot of these companies have been doing, these precious metals have been doing very well. And so we saw that FCX came up, hit a new high, came down to the 30-day moving average and bounced. And today it's even crossing, this blue line is a 10-day moving average. So could we look at this and say, hey, it's at $63 a share. If we wanted to do a short-term trade, could we just trade it back up to this $69 level? Okay. And you might say, well, it's at 63.77. If we went up to 69, well, we'd be making $5 and change. That's not nothing. So, we could figure out what that is. And if we said, well, where might we put a stop? Well, our recent low here was at 58.23. So we might say, okay, I'm going to take that 58.23 and I'm going to put a stop 2% below that. Because it really hasn't gone below this 30-day moving average, since, it broke out. So we could even take this, 58.55 times 0.98. So that would be 57.06. So our stop would be at 57.06. And so if we look at this and we say, okay, we can buy up to $5,000 worth of stock. So if I take my 5,000 and I divide that by 63.77, how many shares could I buy? Well, we could buy 78 shares. So we're going to come out here, we are going to right click, and we are going to buy custom with an OCO bracket. And so we're not buying 100 shares because that's a little too rich. It's out of our snack bracket. We're going to buy 78. And then I'm going to take this firecracker and turn it into a paper clip. And then when I click anywhere else on these lines, the quantities will come together. So why? Okay. I don't know what's going on. My system seems to be giving me, I should be able to change these till good till canceled. So I want to make this a mark, and it's not letting me change this either. Let me just log out. This is highly unusual. We do these kind of trades all day long. So in this one, John, we're buying the stock. But we're going to do another trade where we're doing a call. And then we can compare them. Okay. So we're going to do 2 trades on this. So, but just let me restart this because, we seem to be having some order issues. Okay. Here we go. Well, Chuck is asking, what price range stock should you stay in? And we can do really any price range, but when, if it's a $600 stock, then, we can't buy very many shares, but it doesn't mean that it's not worth doing a trade. So we're coming down to our trade, right click, buy custom with an OCO bracket. Can I change these till good till canceled? Oh, we wanted 68 shares. We want this to be a market order. Unlock. Oh. Guys, I am, yeah, I am stumped. I don't know that I've ever had this happen. That's so unusual. And like short of restarting my whole system, which would take me out of this, I guess we're just going to have to talk through this today. But what I would do is change both of these to good till canceled. Then we're going to make this a market order to get out when, or when FCX, actually, we don't have to make this a market order. We can just make this 69. And our exit is going to be at, what was our exit? 5706. 5706. And if it won't let me change this, I'm just going to put it in and then we can go in and change till canceled. So we're risking a little more to the downside, $6.69, and we're buying 68 shares. So can we do that? 68 shares times $6.69. That's $454. Now, when we put a stop loss in, does it guarantee we'll get out at exactly that price? It does not. But if we look at this and we said, hey, if we're in at 63.75, and if we get out at 69, we could make $5.25 a share. And $5.25 a share on an entry price of 63.75, that's 8%. And this is a short-term trade. So somebody's saying that Schwab doesn't give this a high rating, but we're not marrying this stock. We are not putting a ring on this, my friends. This is a dating strategy. We're in it for a very short period of time. Okay, so we are going to put this in our stocks with target group. Okay, and what is this target? This is a swing target. And we are going to compare this to a long call. Okay. And so if we looked at doing a long call, could we come out to March? And if you said, well, if we're looking at the chart for FCX and we're saying, here's our target at 69, and I like to draw things on the chart for those of you who've been here before, but I like to do this even in my own personal account. So I will put my target in here and say, show it on the right. And it's at $69. So I just kind of draw something in the neighborhood because I can customize it and then click OK. So, we can see that this is our target. And then we can put a circle around this and say, okay, this is when we place this trade. Now, could we have placed it Friday? We would have had a legitimate entry Friday and we would have been up 5%, which would have been nice, but we didn't get to meet Friday. So Connie covered this for me. But, so this is our target and we can see where we're going. And you might say, well, why would I want to come all the way out to March? I could see this, hitting the target by the end of the week. And so if you look at this, you might say, well, because of theta. And what do I mean by that? Well, if I look at theta on this $2 option, I'm losing 10 cents a day in value just by the passage of time, even on the weekends. So, but if I come out here to March, I'm only losing 6 cents a day, and it's on a much higher price. Like on the price that's comparable, like this around the $2 mark, I'm losing 5 cents a day. So my time is inflicting half the wound. And so because time starts chipping away at the value the most in the 3 weeks prior to expiration, we want to go out far enough that we intend to hit our target before we have 21 days to expiration or something in that neighborhood. So we can risk up to $500. So we're saying, okay, well, if we buy a call, we have no intention of losing all $365, but it's possible. Just like when we put a stop in, there's no guarantee we're going to get out. Like we're going to put a stop on this. So we're going to buy, and we're only going to buy one because two would be over $700. We can't afford to do that. And actually, just a minute, I'm going to do it this way. Buy custom with an OCO bracket. And so here, this is going to be based on the price of the stock. And for some reason, this isn't letting me make this a market order. So I will go in and change this later. But what we want to get out at is if it loses half its value. So if we take 370 and we divide that by 2, we're going to say if it gets to the point where it's worth $1.85, we want to exit. Okay, and we're going to make these good till canceled. Now, what I want to do is make this a market order. And then when you make it a market order, I'm going to click this sprocket and say, please exit when it gets to this value. At or above $69. Oh, need it 69. And so our exit is the same as it is for the stock position. And I've got this conditional order in, but I also have this in, and that's not supposed to be there. I want this. So let me put in Theo price and say, hey, and this is not the way this should look, actually. I'm a little confounded by my system constraint today, but we could come out and say, hey, if this did hit our target by Friday and it's trading at 63.68, so if it went up by $6, the first thing you do is hit reset. If it went up by so I'm trying to estimate what the price might be, $6 and 40 cents. It would have hit that 69. In fact, okay, it would have hit 70. So let's make it 540. What might this option be worth? Now I have to put a date in here. Let's say by Friday, it came up and hit $69 and hit our target. This option might be worth, and we're going to come out to March, somewhere in the neighborhood of $6.60. So we're saying we want to sell it for at least $6, and it has to go. So we would think it might be worth $6 or more. So if we put $6 here, it's saying don't sell it unless it hits at least $6. And FCX has to be trading above $69. So if this option is hits $69, the value of the stock, and it's over $6, then it will fill, but it won't fill until it hits $69. And then if the value of this option goes below $1.85, we want to exit. Now, some might say, well, hey, why aren't we then, if we're getting out at $1.85, we're only risking $185. Why aren't we doing 2 contracts? Because if FCX gap down, we could lose more. And so we're erring on the side of caution. Like, I know a lot of people, when they think about options, they think, they're very risky, and you can lose the whole amount. But if you plan on, losing the whole amount, and you position size appropriately, then, you're not risking more than you can afford to lose. And so this is a swing trade, and we're going to compare it to the stock position. And I apologize that I'm not able to put that order in the way I would have ideally liked. I'm going to have to call the trade desk when we're done. Okay, so we've done 2 trades on FCX. Let's come and look at Newmont Mines. So Coco, I would normally not have the condition and the $6 plus on the option value. It just, my paper money is not allowing me to just make it a market order to exit, which is what I wanted to do, to make it a market order to exit at when the stock hits 69. So, and I'm not quite sure why I'm having this hiccup with this right now. So Newmont is a mining company, primarily gold, at many places around the world. And so if we look at Newmont, it's been on quite a tear. It's gone from, $41 up to $134. This is not the first trade. We've placed a few others, but it kind of had this pulled back to the 30-day moving average, and then the very next day crossed it again. And some might even say this is a diagonal resistance breakout. So could we do the same kind of thing? Could we put in a target here at 134? And the answer is we could. So, and could we do this with stock? We could. Now we've got earnings coming on the 19th, but if we wanted to do a shorter term trade, and this is shorter than we would normally do, earnings is the 19th, this is the 20th, but if we said, okay, we're very bullish on this configuration, how about we came in, and I'm going to change this back. We've got lots of volume on these contracts. What if we just did, and we've got a tight bid-ask spread here. It's 40 cents, so that meets our requirements. It trades more than 1 million shares a day. It meets that requirement. If we did a long call vertical at 119 and 120, the idea with a long call vertical is we want it to go above the top strike and stay there. And generally we don't want to trade this over earnings. So we want to be out of this prior to earnings. So this is only 11 days. And so the advantage is if it does go up, it's likely to hit our profit target early, like faster. But if it pulls back, we have less time to recover. So it's currently saying this is at 50 cents. We could do 10 of these. And you might say, well, why not just do one that's 5 wide? Then, our transaction costs would be less. And, that's valid too. But here at 50 cents, how much could we make? Well, we're risking 50 to make 50. Now, our goal in this class is not to be greedy. So what we've said to ourselves is if we could make a 50% return, we'd be happy campers. So we could do 10 of these. And then put in an exit and say, hey, well, if we can get in at 45 times 1.5, we'd want to get out at 67. So if this comes up and hits 67 cents in value, we're up 50% on this, and we would like to exit. We're going to make that good till canceled. Confirm and send. And so we've got $13 in transaction costs against a potential profit of about $250. Now, it's actually not going to be 13, it's going to be 26. So the transaction cost when we're doing one of these like this is more substantial. And so we're going to come in, we're going to put this in our long call vertical. Now, the reason that we did it this way and not at, okay, we're doing a vertical, and it will automatically put in the lowest spread it can. If we did 115 and 120, like we're almost through both strikes. And here we're risking $275. So we could compare and contrast these, because this strike that we're buying, this strike that we're selling is the same. We want it to go above 120 and stay there. So I probably should have done fewer contracts. If it hasn't filled, I'll go in and change it. So this is at 280. And we're going to multiply that by 1.5. So that's 420 would be our target. So we're going to make this first trigger sequence, right click, opposite order, and we're going to make this 420. And so this is a shorter term than normal long call vertical. And again, the idea here is that we want it to go above both strikes and stay there in order to achieve our gain. Okay. Okay, so that one filled. All right. Now, what happened in the last week since we last met? Well, we hit targets on 1, 2, 3, 4 different stocks with our short put verticals. We had a short put vertical, and I'm just going to tighten up my time frame here. We had a short put vertical on Citibank, and it hit our target on Citibank. On Citibank, I believe we may have also had a long call vertical. So short put vertical, and it hit our target, which was 80%. So if we come to our monitor tab, account statement, and we look at Citigroup, oh, somehow I went to the other account. We did a short put vertical here for one, and we were $1 wide. We spent 32 cents. We were given 32 cents. We earned a credit of 32 cents when we got in. We bought it back for 6. So our goal was that gain of 50% or of 80% of the max credit. And so we opened this trade on the 26th. We closed it on February 6th, and because it hit our target. Okay, and so if we wanted to do the math and say, well, what did we actually make on that? And I'm only going to go through the math on one of these, okay? Because we just don't have the time. But let me get my drawing tool up here. So we were at 32 and we bought it back for 6. And I've done the math ahead here on this. So our net gain on this was 26 cents a share. Okay. Now, what were we risking? Well, we were risking the difference between the strikes, or $1 minus this 32 cents. So we were risking, because the strikes were $1 wide, we were risking 68 cents. So our return on our risk on this one was 38%. And we did 7 contracts because we were risking 68 cents. So that's what we could afford. You know, that's how much risk we could afford to take. So we made 7 times 26 or $182. Now you may be saying like, hey, you know, less transaction fees. You know, and transaction fees I don't think count. You know, like they aren't taken out of your trading a smaller account or your paperMoney account. And you may say, well, this may not have me drinking, you know, something out of a coconut in Tahiti. But, you know, our goal this year was to make $100 to $200 a week. So that one trade pretty much made our goal, right? And you start racking up a whole bunch of these, and we racked up 6 of these last week that all gained somewhere between, I don't know, 100 and something and $300. Like, you know, it's led to, we started at 25, we're now at 30,569. So it's been a pretty good year so far. Now, on the other side, okay, let me just switch this to a color we can see. We did a long call vertical at 255. Our target was to get out when we made 50%. It probably filled. This target was based on getting in at 250. But if we take our 375, we minus 255, that's $1.20. And we did 2 of these. So we were up 240, you know, not too shabby. And our return on risk, because we could have lost that entire 255 per contract. So it was 255 and we made $1.20. So that was 47%. Now, I know I often get asked, how did this trade or that trade work out? We also had 2 trades on Goldman Sachs. Again, we had a short put vertical, which, you know, we got paid $1.60 to get in, and you guys can go through and do the math on these yourselves. We bought it back to close it out and take our risk off the table for 30 cents. And then we did also a long call vertical. Both of these hit their targets on February 3rd, where we wanted a 50% gain, and we got out for a little better than a 50% gain on that. We also had a trade on JP Morgan. So, and, you know, we did a short put vertical on JP Morgan. We did a short put vertical on Walmart. And so we had, you know, lots of trades that hit target. So that was Walmart, Goldman Sachs, and Citibank. Okay, so that was those. Now we have to wrap things up. But so today we looked at FCX and we looked at Newmont. You might want to look at, keep your eye on AU as well. And then some of the oil stocks like CVX. And just look, you know, for opportunities to practice your skills in areas like this. When there is a survey, one of the questions I get asked a lot is, could you just review what we did today? And so we did. We actually just exited today. It hit our target, a long call vertical on C. But I guess I placed these I must have put them in the other account. So I'll redo these. We bought 68 shares of FCX. We bought a call on FCX, and then we did a long call vertical on Newmont. Okay. So I hope that you have found this helpful, my friends. If you have not subscribed to the Trader Talks channel, you're going to want to do that. And why is that? Well, one, it gives you access to all of the archives. And one of the things that I did was I created a folder called the Trade Management Mini Sessions. And if you're new to this and you've not ever traded a long call vertical and you'd like an example trading plan, here's one right here. Or same with, you know, a simple stock plan, a short put vertical. There's also, and I'd recommend if you're new to all of this in general, I recorded something a couple of weeks ago called The 7 Things I Wish I'd Known About Trading, and you may want to check that out. That was a month ago. You know, and it's under the Getting Started with Technical Analysis. So you may want to look for that. 8 things I wish I'd known when I started trading. And then, of course, the archive for this class will be in there as well. Hit the like button, subscribe to the channel, follow us in the land of X, Barbara Armstrong CS, and Kevin Horner CS. We're also now on LinkedIn, so you can look for us there. Thanks for joining us. Up next, Mr. James Boyd. You'll want to stay tuned for that. Take care, everyone. Bye for now.